You need to understand that being profitable is about managing the entire trading process from analysis to execution, trade management, and beyond. Stuffs happen before and during the trading process, and that is capable of ruining good setup and result in losing trade. Sometimes this variable might be foreseen or prevented, so don't lose focus once you have found a good trade setup. Hello, my name is Soji and you are welcome to Soji Forex. In this video, I'll be sharing with you how to take advantage and trade the pin bar setup. The pin bar setup in your financial market. Now, what is a pin bar? A pin bar is a candle with a rejection which has a wick and a body. It is a candlestick with rejection which has both a wick and a body. So a pin bar, this is a typical example of a bullish pin bar. So a bullish pin bar looks like this. So this is what a bullish pin bar looks like. While a bearish pin bar looks this way. Now, regardless of what is the color of the candle is not important. Either it is green or it is red, the most important thing is your ability to identify this candlestick. And what it means is that there is a time where this price has been down here bearish. Then suddenly buyers came in and begin to push this price until the price closed in this way, which give us a pin bar trading method and execution. So this is what a pin bar is all about, and this is how a bullish pin bar looks like. And this is a bearish pin bar, which means that there is a time that price is up here and then sellers came in and begin to push the price down until the price comes down and close this way. So we have the open of the price, we have the wick, and we have the close of the price. So this is a typical bullish and a bearish pin bar. Another very important thing we need to know is then another way to identify this pin bar, an effective pin bar, the type of pin bar we want to be trading is a pin bar that the wick is 2 or 3 times bigger than the body of the candlesticks. This wick, the rejection you are seeing here, it should be 2 or 3 times bigger than this body. Okay, so what we are trying to say is from here to here should be 2 times bigger than the body. So the wick, which shows us the rejection, should be 2 times or more bigger than the body. That is an effective pin bar. And in some pin bar, it can have a pin above it a little. That is a wick at the upside. There's a tendency that there is a wick at the upside. It is still a valid pin bar. Alright? Now, how do we make our entry in using the pin bar? Now, we make our entry using the pin bar in 2 ways. Number one, we can make our entry at the close of the candle, which is what we are seeing. The price move closes here. At the body here, we can make our entries here. We can make our entries 15 pips above the pin bar. Here, we can make our entry 15 pips above the pin bar, because maybe at times the bar will finish its formation and price will return without moving to the upside. And another way is that we can have our entry 50% of the body of the pin bar. How do we do it? After the close of the pin bar, you pick your Fibonacci and fib 50% of the pin bar. Yeah, this is it. So you see now, at this level of 50%, at this 50% level of the pin bar, you can set your pending order, or you wait for price to pull back to that level, then you make your entry. The opposite is for a bearish pin bar. So now let us go into how we can apply this setup. Remember, in order for us to apply this setup, we will begin in a two-way. And first way for us to apply this setup is for us to identify the trend of the market. Then number two, we want to see a pullback in the market. And after that, we want to see the pin bar formation for our execution. And mind you, when trading the pin bar, you don't go below. The higher the time frame, the stronger the pin bar formation. The higher the time frame, the stronger the signal. If you are looking for the signal on H4, it is better and stronger compared to when you are looking for the signal on H1. So the higher the time frame, the stronger the signal. Alright, this is our H4 time frame. So let's go to our H1. Do not go below H1 in looking for the signal. So number one, let us establish the trend of the market. And let's use this particular chart now that we are seeing to establish our trend. So now looking at this chart, we have our upper Bollinger Band line here, and we have our middle Bollinger Band and our 50 moving average. Okay, and we say whenever price is above the middle Bollinger Band, which is the green line, is an uptrend, and the crossing of price to above the 50 EMA give us a more confirmation that we are in an uptrend. So which means that from this zone, price is moving from the lower Bollinger Band. So once you see price take off from this zone, price started moving, first you pick your trend line. You draw your trend line. The movement of the market begins. You draw your trend line. And afterward, you now wait for, remember, price is still below this level. But because it has come to the area of our lower band, we know it's a level of support, because the lower Bollinger Band serves as a level of dynamic support and resistance, and also as our exhaustion point. So we want to see the price reject from this level. Then you draw your trend line, and coming here, the price crosses and close above our 50 EMA, which is the blue line, and our moving our middle Bollinger Band. And having established that, the price went up and pulled back. You can see that the price went above the moving average and then pulled back to this moving average and also pulled back to our trend line and gave us a pin bar formation. This particular candlestick you are seeing here is a pin bar. All you need to do is understanding the body. In as much as it is having a wick at the top, this wick at the downside is 2 times more than this body, and this wick at the downside is longer than the wick at the top. So it is not a doji, this is a pin bar, and as such you can choose to make your entry at the close of the candle, or you make your entry 15 pips above it, or you make your entry 50% below. But I'm advising that you make your entry 15 pips or at the close of the candle. Your stop loss is 15 pips below. So what we are saying in essence, your stop loss is somewhere here, your entry is at the close of the candle, and then you watch the market to do its own thing. And you can see that you have your trend line which serve as your reference, so that when price break this trend line, you already know that something is happening, either is trying to change direction. So that is example number 1. And then you can see this particular pin bar was formed around this zone at this high. Why don't we make our entry? Remember, we say we want to see a cross and want to see a pullback. So this pin bar is not valid because it is not formed around the zone of our moving average and our trend line. So there is no pullback to validate this particular pin bar. So it means that we are not trading pin bars in isolation. So let's look for more scenarios of the pin bar. Great, here we have another one. This is a pin bar, and we have so many confirmation as regard to this particular pin bar. We have this first rejection, second rejection, then this is a pin bar. The wick here is bigger than the wick at the upside, and the formation itself, this is bigger than this body. It's almost 2 times of this body. And what happened is that price went up and then pulled back into the zone. All right, price pulled back into the moving average, and then remember, price is still above our middle Bollinger Band, so we still know we are in an uptrend despite that price closes below our moving average indicator. So we know we are seeing an uptrend. So price came. All we need to do is for us to draw our trend line, because we know where we are, we know that we are still in an uptrend. So when this begins to happen, you draw your trend line, because remember, we said price will be able to come and then go make a pullback. So price went and then pulled back, which gave us this pin bar, and then you make your entry and your stop loss, and you are good to go. So that is a simple way for us to identify our pin bar chart and market formation. Here we have another one. price went, you can see that this is the lower Bollinger Band. So price on these candlesticks, price closes above this Bollinger Band and above our 50 moving average. And then afterward, what happened? The price pulled back and went and closed above the moving average, which gave us a pin bar formation. So at this pin bar, you make your entry and you are good to go. Now, the pin bar is not only trade based on the moving average. You can as well mark out your area of support and resistance. You go to your H4 time frame, you mark out your support and your resistance. Just as you are having in this zone, you mark out your support and resistance zone. We've made a video on how to mark out our support and resistance zone before, so you can go back to watch those videos. Okay, you mark out those zones, your point of failure and points of reaction. Once those zones are marked out, you are good for your entry. Remember, the same thing we're still saying is what is applicable here. Price was coming from here, so you already know that this price is pushing up. So all you need to do is for us to draw our trend line, and after this we want to see the price pulls back. You see price went, pull back, it went, closes above, pull back, and then here we have our pin bars formation, and at the close of it we have our entry, and you can see how far the price went all the way. So but when you are having a resistance or a support zone above that level, you need to wait for the close of the price above the zone. Here are another entries. Price went, pulled back into the zone. You can see this pin bar rejection. Very beautiful pin bar. You can see it. It pulls back to our trend line, gave us this beautiful pin bar, and we move to the upside. I think we still have another one here. I cite this is it, and that takes us into that trade. So you can look for this pin bar. Remember, the higher the time frame, and here we have another beautiful pin bar formation. We've marked our zone. What do we do? Look at it. Give us this beautiful pin bar formation, rejection from our moving average in our middle Bollinger Band, and you put your trend line, because you know that once price revises and close out of it, you are out of the trade. So this thing is pretty much simple, and I believe you are getting value from this video. Please do not forget to like, to share, and subscribe to our channel.